to talk about the 35-year lease that the company has signed with the Indian Railways. Mr. Kalyan Rama, thanks so much for joining us. I wanted to ask you, can you tell us a little bit more about this agreement, and is it different from the one that you had mentioned in your conference call? Can you tell us what is the amount that is involved?
Morning. Let me first clarify you that we have not yet signed the agreement. The work is in progress. So the 35 years lease agreement, whatever I said in the conference call, it is on the same lines. We are working on it. So it is not yet signed. So let this be clarified very clearly. But that work towards that is in progress, and we are very hopeful that these things will happen.
So the amount is not something that you can divulge?
The amount, see, at this moment, the work is in progress. So there are certain principles on which we are working. As I mentioned to you, in LLF, we made the payment. This is the industrial rate, the current market industrial rate, as decided by the revenue authorities.
Okay.
So the principle adopted will be the same. So now, of course, with the government, I cannot tell you the exact figure. That will be a wrong information unless the things are very clear and it has been agreed upon.
Certainly. Acha, we were under the impression you already signed it. It is still in the process, is it? So this upfront amount of 3,500 crore is also still not signed, sealed and delivered.
See, the 3,500 crores is the loan amount which we are intended to take. So when we do this, as a corporate governance practice, we will inform the stock exchange and inform the investors that this is it. We are exploring the possibility. Okay. So if the investors are ready in that, we said we are exploring the possibility of availing a loan of 3,500 crores along with our cash reserve of 2,500 crores. So the figures, anybody's guess. It is anybody's guess. It is a simple mathematics. So that puts A plus B at 6,000 crores. That's what we are looking at for signing this 35 years agreement. Okay. But exact figure will come out once we complete the process with the Ministry of Railways and we come to a final joint understanding. Okay. As on date, the work is in progress. It is progressing very well because the area surveys and all that, I think we have gone a lot ahead in this manner.
Mr. Kalyan Rama, that was going to be my next question. Is all the homework now done for divestment? You told us that you had cleaned up the books and then now there is this lease agreement which will fall in place. With that, are you done with all the homework to prepare for divestment?
From our side, yes.
Okay.
From our side, we completed. We have done all the homework and we are ready. And as I said earlier in my last interview with you, that it is the government decision. When to divest, when to sell the government share, when to give it. Yes.
Got it.
Okay, got that. So we will perhaps have to wait to hear more from the government on the divestment process. But tell us about the business itself. What kind of volumes are you expecting to see over the next few quarters, both in terms of domestic as well as EXIM? What could the trend be?
Things are looking good. As I again maintain my guidance at this date, because not much time lapsed between my last interview and this, that 12% of the top line and 100% in the bottom line. So the last year we did a PAT of around 500 crores, roughly near to that. And this year we are expecting 1,000 crores PAT because we have cleared up all those one-time payments in the last balance sheet itself. And the demand is good. Exports are really picked up and the box shortage has come down because of a scheme what we have given. We are seeing a lot of empty repositioning into the hinterland. I think I mentioned about this 50% rebate what we extended to the import box, that empty repositioning boxes from port into the hinterland, that we extended for the whole year now. Until 31st March next year, the 50% rebate will continue. Okay. This is helping really getting a lot of boxes into the ICDs. Okay. And there is no shortage of box as of now for the exports.
Okay. Actually, I was coming to some more specific volume numbers. Q4, your revenue was about 1,300 crore, right? Or almost 1,400 crore. How will the first...
The revenue is 1940 crores. Q4 revenue is 1940 crores.
Sorry. I was only referring to the EXIM. And that was my question, actually. The export-import revenue was 1384. The numbers we got from the Trade Commerce Ministry was very strong on exports, both for May and for April. So, have you also had a good 2 months? Any numbers you can share?
No, numbers I can't give you as our practice as we followed. But yes, volumes are very good, and all our expansion plans are on. They are on, and we are not stopping anything. In fact, we are procuring a lot of rigs. As I mentioned earlier, that we had a program of procuring 100 rigs in next 2 to 3 years. That's on. So this year we will be adding something like 35 to 40 extra rigs, and these are all high capacity rigs. They are compliant to the DFC running, where the payload we call the weight which we can carry on the wagon is 80 tons. As of now, the wagons which we are moving, they are only of 68 tons. So there's a higher payload capacity wagons. They are specially manufactured for moving on DFC and on the railway tracks cleared for higher loads. So these already 9 rigs we got as of date, and the whole we will add another 35 to 40 rigs in this year.
So we don't think volume, we think only rupees. So if you can give some guidance in terms of how much revenue can grow because of DFC, because of pickup in exports, because of the additional rigs you're adding.
See, that I already gave you. See, exact these figures at this moment, I may not be able to give you the exact estimate. That will
not exact, sir. I'm only expecting a ballpark percentage growth.
See, overall ballpark, as I said, 12% growth in top line. I am very sure as this things stand today.
Fair.
But DFC, if it comes into operation, which we are also waiting. We are constantly in touch with our colleagues in DFC, and we will, once DFC comes, we will bring in a lot of changes. Some more changes will come, which will be very beneficial for the company, and which will definitely add value to the stock. The investors will be benefited by that. So those things, we are just waiting for the DFC leg between Palanpur to Rewari to start.
Okay.
That will give us, one very speed movement, which gives the transit time assurance to customers. So more customers will try to join the rail, which they are moving today by road because of the transit problems. They will all come on to rail, and double stack movement will further increase.
Okay, got that. But what is the road rail share now, and how much can it increase, rail share?
We see this particular sector where the dedicated freight corridor is coming, the northwest, sector, which is connecting the Delhi and the Haryana, UP, Western UP. The rail share is roughly around 40% today.
Okay.
This may go up to 50 easily.
All right.
Once it starts.
Okay. Got it, sir. Pleasure speaking with you. Thank you very much, Mr. Kalyan Rama, for joining us with your assessment of how things may pan out over the next few months. All the very best. We'll run you through the past financials of Concor. The revenue will run, the bar charts, and then you'll have the margin and profit after tax as well. Quick break, and thereafter it's a big story. Market regulator SEBI has come down heavily on Franklin Templeton AMC by transferring the fund management advisory fee of 512 crore rupees of the last 2 years to investors. We're going to be joined by Anant Narayan, Professor of Finance at SPJIMR, and Mahindra Jaju, the CIO Fixed Income at Mirae Asset Investment Managers. They also will be discussing the new rules on how to reflect risk in debt funds. That's the more important question we'll be discussing with these experts.